And it's not like I have any control over it. I remember I went to school with a family that had 6 boys, and
Oh, boy. What is it, 1 o'clock?
and 30 seconds.
Good afternoon, everyone, and welcome to the August 10th Public Service Commission meeting. We have the reading of the meeting minutes of July 27th. Does anybody wish to make any corrections or to make any changes? Commissioner Correa.
I move that we adopt the minutes of July 27 meeting.
Second the motion?
Is there any discussion on the motion to approve the meeting minutes? Hearing none, Commissioner Correa.
Aye.
Conaway.
Aye.
Commissioner Drexler.
Aye.
Commissioner Gray.
Aye.
Aye. The motion carries. Consent agenda. Does anyone wish to take an item off the consent agenda? Does anybody have any questions about the consent agenda? Does anyone have a motion about the consent agenda?
Move that we adopt the consent agenda as presented.
I'll second.
And is there any discussion on the motion? Hearing none, all those in favor, Commissioner Correa, say aye if you have, if that's how you vote. Commissioner Conaway?
Aye. Aye.
Aye.
Aye. The motion carries. The consent agenda is approved. We've got the regular agenda, also known as a deja vu agenda. And I guess you're still the kickoff person.
I guess I am. It's my motion. So, yeah, go ahead. So I just, maybe a few housekeeping matters first. Paragraph 6 of order number 10069, in which the commission approved the opening of this docket, provides that each party has 15 minutes to summarize their report or testimony and answer questions from the commission. And after that, the parties have 15 minutes for argument to the commission. So I guess what is your pleasure? Do you want to hear from all the witnesses first and then the lawyers present their arguments, or do you prefer some other process?
I think we usually hear the witnesses first.
Okay, so
It's
hear
helpful
all
that
the
way.
witnesses first, and then we'd go on to argument.
I think so.
Okay.
Ms. Scott, is that okay with you? And Ms. Pope, is that okay? For you?
Yes.
Okay.
Okay, I hope you have been provided with an exhibit log that identifies all of the exhibits pertinent to this proceeding. There should be 10 exhibits, and the parties have stipulated to the admission of all 10 exhibits.
They are admitted without any objection.
Okay, all right, so Mr. Glenn Watkins is the DPA's witness. He submitted an affidavit on behalf of the DPA, and he is appearing by telephone, and with the commission's permission, I ask that he be sworn.
Mr. Watkins,
Yes, ma'am.
do you swear that the testimony you're about to give shall be the truth, the whole truth, and nothing but the truth?
I do.
Mr. Watkins, would you please state your name and business address?
Yes, my name is Glenn A. Watkins. My business address is 6377 Mattawan Trail. That's Mattawan, Mechanicsville, Virginia, 23116.
And have you previously provided expert testimony before this commission?
Yes, I have. I've presented testimony on numerous occasions before the on behalf of the Delaware Division of Public Advocate, as well as the Office of Attorney General, including rate cases involving Tidewater Utilities, Delmarva Power and Light, both electric and gas, Artesian Water, Chesapeake Utilities, and Suez, and that's all that comes to mind.
Ms. Scott, will you stipulate that he's an expert? Thank you.
Oh, that was actually the end of it. Mr. Watkins, were you retained by the public advocate to review Tidewater's financial reports?
Yes, ma'am.
And did you submit an affidavit that was attached to the public advocate's petition pursuant to Section 310, asking the commission to issue a rule to show cause why Tidewater's rates should not be reduced?
Yes, I did.
Have you reviewed Tidewater's opposition to the DPA's petition, including Exhibit A to that opposition?
Yes.
Would you please explain the general basis for Tidewater's contention that it is not earning above its authorized rate of return?
Sure. And as set forth in Tidewater's Exhibit A to its opposition, the company provides its reported operating income, rate base, and rate of return for each 12-month period beginning with the fourth quarter of 2021 through the second quarter, which ends in June of 2022. In addition, Tidewater presents numerous quote-unquote prospective rate base and operating income adjustments that will occur after June 2022, i.e. often known as post-test period adjustments. When these prospective adjustments are added to the company's reported results, Tidewater represents that its prospective earned rate of return will be less than its authorized rate of return, i.e. 7.05% compared to an authorized return of 7.92%.
And I'm sorry, is that 7.05 or 7.505?
Thank you. 7.05.
Let me try.
7.505.
Thank
I
you.
believe.
Thank you. Now, staff claims that Part E, subsection 4.3 of the Commission's minimum filing requirements provide that a utility may update its quarterly rate of return report for more current financial data, including pro forma adjustments. In your opinion, is it appropriate for the Commission to give any consideration to the prospective adjustments?
No. While I acknowledge that subsection 4.3 provides in its entirety that, quote unquote, the quarterly rate of return report shall show the jurisdictional actual and or adjusted rate base, earnings, and overall rate of return based on the elements, methodology, and allocation factors utilized in the most recent rate case or updated for more current financial data, including pro forma adjustments, end quote. However, but the purpose of the quarterly rate of return statements is to provide reliable information to the Commission relating to the financial performance of major utilities in the state of Delaware. These rate of return statements form the basis in determining whether a utility is under-earning or over-earning its authorized rate of return. Indeed, my review of the Commission's minimum filing requirements revealed the following statements. Quote, furthermore, the Commission intends to more closely monitor the financial performance of Delaware utilities on a continuing basis and also is required to report certain information annual to federal agencies and others which frequently require surveys and or telephone calls to the utilities to obtain such data. Then the regulations continue to state, it is intended that the required information be furnished in accordance with the format and instructions furnished herein. If exceptions are requested or proposed, they should be fully explained and justified. Now, while it is my understanding that a utility's quarterly rate of return statements may include adjustments, it is also my understanding that any adjustments should be fully justified, explained, and documented. Although Tidewater's own reports filed with the commission indicate that the company has been consistently over-earning since at least 2017, 5.5 years, only after the commission issued a show cause order does Tidewater now claim that it is not over-earning based on various adjustments it now proposes to the reports it actually filed with the commission.
Do Tidewater's recent reported quarterly rate of return statements filed with the commission contain any amounts not authorized by the commission?
Yes, they do. From at least 2014 through 2016, Tidewater's reported rate of return statements properly excluded construction work in progress, also known as CWIP, from rate base. Starting in 2017, the company began including CWIP in its reported rate base.
And what is the commission's position on including QUIP in rate base?
This commission has long excluded CWIP from rate base for rate-making purposes. The reason behind this is that CWIP represents amounts that a utility has incurred during the construction of various capital projects. However, these plants are not in service and are not providing any benefit to ratepayers for the provision of utility service. Therefore, these costs are not allowed by this commission or considered within the rate-making calculus.
Do you agree that it is appropriate to evaluate Tidewater's earnings over the 12-month period ending June 30, 2022?
Yes, I do. The June 30th, 2022 quarterly rate of return statement filed with the commission on August 4th of this year, which was the day after Tidewater presented its Exhibit A in its response or its opposition, presents the most current information regarding Tidewater's operation and financial performance. As such, it is appropriate to rely upon the company's reported 12-month financial performance ending June 30th, 2022.
Have you calculated Tidewater's 12-month rate of return for the period ending June 30th, 2022, with the exclusion of QUIP from rate base?
Yes, ma'am, I have. The company's rate of return that includes QUIP in rate base is 8.511%, which is set forth in its quarterly rate of return report for the 12 months ending June of 2022. However, when QUIP is removed from rate base, Tidewater's rate of return increases to 9.173%. I calculated this amount by removing $10,009,457 of QUIP from rate base, which is recorded in the general ledger, and then dividing Tidewater's reported operating income of $11,802,088 by the $128,658,020 of rate base. This may be the first time I've ever given real numbers without rounding, but nonetheless, this results in an overall rate of return of 9.173%.
Now, although you recommend giving no consideration to Tidewater's proposed prospective adjustments in this case, have you reviewed the specific adjustment that Tidewater proposes in its opposition to the Commission's show cause order?
To some extent, yes. And what I mean by that is, while Tidewater provided an itemization of its various proposed prospective adjustments, many, if not most of these adjustments were simply hard-keyed, such that I do not know how they were derived, nor was there any documentation supporting any of the company's proposed prospective adjustments.
What is your understanding of each of the company's proposed prospective adjustments?
I'll try to keep this as short as possible, but I'm going to try to go through the list, except for those that are mechanical in nature. So the following is my understanding. The first is, I'll go over rate base. The first relates to plant and service. This proposed adjustment relates to the projected plant that will be placed into service by December 31st of 2022. In other words, their projected amounts for that. However, the company's work papers are inconsistent in this regard, in that the reported plant and service as of June 30th, 2022, in Tidewater's Exhibit A to its opposition is $298.2 million. But at the same time, the work paper showing its development of its prospective adjustment indicates that this amount is $288.2 million, some $10 million difference. Similarly, Exhibit A to the opposition shows contributions in aid of construction and customer advances to be $103.6 million, while the work paper shows this amount to be $104.6 million, $1 million different.
And let me just
The
interrupt.
second rate base,
Let me just interrupt you there
Adjust-
for a second. You said that the reported plan and service as of June 30, 2022 was $298.2 million, and the work paper showed $288.2 million, correct?
yes, ma'am.
And that's a $10 million difference, not a $2 million difference, correct?
If I said 2, I apologize. I meant to say 10.
Okay, I'm sorry, go ahead.
All right, sorry about that. So typical with any adjustment, the second rate base adjustment relates to depreciation reserve. The company's calculations show that that the depreciation reserve reflects 6 months of depreciation expense associated with the company's proposed future plant in service. Then the third rate base adjustment relates to cash working capital. Now, cash working capital for this company relates both to its pro forma or its future adjustments, as well as its per books, and I'll explain why in a minute. The company's as reported and prospective adjustment is calculating using what is known as the 1/8 of O&M expense method, where you simply take your total O&M expenses and divide by 8. This is an old FERC methodology that was developed decades ago, and the theory being that for most utilities, revenues are collected in arrears and that you incur your expenses throughout a month. In general, there's about a 45-day lag between revenue collection and expense cost incurrence. So 45 days is 1/8 of a year. So that's how they came up with the 1/8. But the important point to remember is the assumption that there's approximately a 45-day lag before you collect revenues and you incur expenses. Now, although cash working capital is not an item on a utility's balance sheet, it is utilized as a component of rate base typically to compensate the utility for the cash for its day-to-day operations. However, Tidewater is somewhat unique in that Tidewater's tariff indicates that fixed facilities charges, also known as customer charges, are billed in advance of service, whereas most utilities bill for services in arrears. Therefore, because a very large portion of Tidewater's revenue stream is actually collected in advance, there's not a lag, but rather a lead, if you will, in revenue collection, which would indicate that there really would be a negative cash working capital. And this is very important in the sense that the company has, and I don't have the number exactly in front of me, but I believe they report to the commission that their cash working capital is approximately $2.3 million, and I can verify that exact number. But the point being, both the reported and the prospective adjustments are significantly overstated for the reason I just indicated. Now, if we can move on to operating income, the first prospective adjustment the company made relates to revenues. The company has restated its revenues to reflect customer growth that has occurred through June 30th, 2022. This is a common and acceptable practice when you use end-of-year rate base. So you're properly matching, revenues and investment and expenses. At least up to this point is appropriate. However, the pro forma amount is hard-keyed, and therefore I don't know exactly how it was calculated, although they give a narrative explanation, but I don't know the arithmetic of how they arrived at that. The second operating income adjustment is tank painting expense. The company proposes to amortize an additional tank painting expense over 10 years. However, in reviewing their detailed general ledger, I cannot find the unamortized balance of this prospective adjustment anywhere in the company's general ledger or balance sheet, and do not know how it was determined. The pro forma amount is hard-keyed and is not known how it was calculated. The next operating income adjustment relates to chemicals. Tidewater's expense adjustment is based on the June 2022 going level cost of chemicals, and then they annualize this for the entire 12-month period. Therefore, this adjustment is akin to restating chemicals costs as of December 31st, 2022, because they're taking a full year and pricing it at today's cost. Even though revenue is restated only through June 2022, you see there's a mismatch between the benefits of revenue and the costs associated with various O&M expenses, and this will occur time and time again as I go through this. The next operating income adjustment relates to purchase power and fuel. These expenses were increased based on a proposed September 2022 increase in rates for purchase power and the current cost of fuel as of June. And again, they expressed this then for an entire 12-month period. The pro forma amounts are, again, hard-keyed, so it is not known how they were calculated, but conceptually, this is similar to the problem that I observed with chemicals, in that they're using forward-looking entire 12-month period beyond the test period for costs, but not for revenues. And speaking of revenues, we heard in DPA's initial motion requesting a show cause order, and by Tidewater's own counsel's admission, Tidewater's customer base is growing very, very quickly. They're very fortunate in that regard. So there's a significant mismatch as far as these are concerned. Next on the list is purchased water expenses. These were adjusted based on an assumed 6% increase that will become effective September 2022. Whether this will or will not happen, I don't know, but I can only assume that it will. But nonetheless, the pro forma amount is hard-keyed, and it is not known how this was calculated. The next operating income adjustment relates to salaries and wages. Now, this adjustment encompasses several components. First, the company proposes an adjustment for open positions due to quote-unquote workforce scarcity. Next, the commission proposes an adjustment due to quote-unquote the finalization of salary/wage grade guidelines and market review. I have no idea what that means. Next, the company proposes, in addition to that, a 3% wage increase for overtime that was effective prior to April 2022. Each of these various salary and wage adjustments are hard-keyed, and once again, I have no idea how they were calculated or determined. The seventh operating income adjustment relates to employee benefits, which include medical and dental insurance, which was annualized based on the current June 2022 levels, which again would have effectively, because of the annualization, would carry that on an income statement through December of 2022. In addition, there was another adjustment for employee benefits for the open positions due to workforce scarcity that I discussed earlier. Second to last is an adjustment for business insurance. Tidewater annualized this expense based on its current 2022 premium volumes, or premium levels, I should say. Again, these amounts were hard-keyed, and it's not known how they were calculated or anything of that nature. Again, this brings this effective operating income for this adjustment all the way out to December of 2022. Finally, the last operating income adjustment relates to depreciation. This depreciation adjustment has two components. First, the company annualized a full year depreciation for plant that was in service as of June 2022. In other words, for a plant that went into service in April, they're requesting a full years of depreciation on a going forward basis. For one that started that was placed in service in June, they also want a full year depreciation, even though that depreciation is already reflected on their books and records for their depreciation expense. And then, secondly, with respect to depreciation, the company's adjustment reflects a full year of depreciation for its future plant that will be placed in service sometime between June and December. Again, there's such a tremendous mismatch between they increase costs significantly and go out realistically as far as April of 2022 because one of the labor expenses, but then they limit the benefits of revenue to June, knowing full well that Tidewater is growing, I don't want to say leaps and bounds, but very aggressively compared to other utilities around the country. So that concludes my summary of the individual proposed adjustments made by Tidewater.
In your opinion, are Tidewater's prospective adjustments proper?
The short answer is no, Counselor. As indicated, I have no idea how Tidewater calculated the vast majority of its proposed adjustments, nor do I know whether the proposed plant adjustments and cost increases are accurate or frankly even true. More fundamentally, and the Commission is well aware of this situation, Tidewater's proposed prospective adjustments tend to increase its rate base as of December of 2022 and increases expenses as far out as April of 2023 and beyond. At the same time, and as discussed during the Commission's July meeting, it is well known that Tidewater is experiencing significant customer growth. With this understanding, Tidewater is proposing to cherry-pick its adjustments to show earnings below its authorized rate of return. This is because the company's revenue adjustments only reflect number of customers through June of 22, while its rate base and expense adjustments go months beyond this time period. Therefore, there is a mismatch between revenues, expenses, and rate base. When all of these factors are considered, none of the company's proposed prospective adjustments should be considered or given any weight. It should be remembered that Tidewater itself reported its earnings to the Commission. These reported earnings are assumed to be an accurate representation of the company's financial performance and not some amount that can be manipulated into making it appear that Tidewater is not over-earning.
Now, as a matter of equity and fairness, are there other reasons why the Commission should not give any weight or consideration to Tidewater's after-the-fact proposed prospective adjustments?
Yes, there are. Tidewater will not be harmed if the Commission temporarily reduces its rates pending the completion of the full rate case that Tidewater says it will soon file at the beginning of 2023. This is because the Delaware legislature has determined that the prohibition against retroactive rate making does not apply to Tidewater in a Section 310 proceeding. However, ratepayers will be harmed because the prohibition against retroactive rate making still applies to ratepayers, and they will be unable to recover the overpayments that they've already made. They will also continue to pay unjust and unreasonable rates. Therefore, it is fair and reasonable for the Commission to base its findings on Tidewater's reported earnings through the end of June 2022 without consideration of prospective adjustments that were clearly made to avoid any rate reductions.
What are your conclusions as to whether Tidewater is over-earning?
Based on all facts and circumstances that I have available, it is apparent that Tidewater has had and continues to have earnings well above its authorized rate of return.
Have you calculated the required reduction to revenues based on Tidewater's earnings above its authorized rate of return?
Yes, ma'am. I have concluded that Tidewater's current rates produce excess revenues of $2,247,214, and that these excess revenues require a 5.992% reduction to the company's rate revenues, which would exclude miscellaneous service revenues.
Now, in your affidavit that was attached to the DPA's petition filed in June, you calculated that an approximately 8% rate reduction was required. Why are you now recommending a 5.992% rate reduction?
The approximate 8% reduction that I calculated in my affidavit was based on the company's 12 months of operations during calendar year 2021. Since that time, the 5.992% rate reduction that I now recommend is based on the most recent available information, which is the 12-month period ending June 30th, 2022.
Thank you, Mr. Watkins. Mr. Watkins is available for any questions that the Commission may have.
Ms. Scott, questions of Mr. Watkins or Dr. Watkins?
I just would like to clarify, do you agree or disagree that pro forma adjustments are permitted for these quarterly rate of return filings?
It's my understanding, Ms. Scott, that they are permitted, but they must be documented and fully explained.
Where does it say that in the regulation?
Let me see if I can find it, Ms. Scott. As I indicated, the regulations state it is intended that the required information be furnished in accordance with the format and instructions furnished herein. If exceptions are requested or proposed, they should be fully explained or justified. And Ms. Scott, that comes from the rules at 26 Delaware Admin Code 1002, general information at compliance with minimum filing requirements. And that's at best I can do as a non-lawyer.
And have you had occasion to review similar reports filed by other utilities in Delaware with pro forma adjustments?
What similar reports would that be, Ms. Scott?
The quarterly rate of return reports that get filed on a quarterly basis.
More than likely I have. I'm almost sure that as part of my rate work in Delmarva Power and Light rate cases, I've looked at quarterly rate of return statements, but don't recall specifically. But I think I probably have.
Including pro forma adjustments to such statements?
That I don't recall, or I don't know whether they were per books or included adjustments or not. I just don't know.
Thank you, Mr. Ryan.
Ms. Pope,
No questions.
Commissioner Gray,
I should clarify to the commission that I'm commission counsel today.
oh, I'm sorry.
Bill O'Brien's
That's right,
on the
Mr. O'Brien's on the phone, yes.
Thank you, Chair Winslow. Bill O'Brien on behalf of staff. I do have just one question from Mr. Watkins. Mr. Watkins, at one point you referred to Tidewater's pro forma adjustments as post-test period adjustments. In the context of a rate of return report, what test period are you referring to?
Thank you, Mr. O'Brien. By the way, good to hear from you. Test period was my naming convention. We often use that, but to answer your question, I'm considering the test period being the 12-month period ending June 30th, 2022.
Thank you. So that would be a historical test period.
That it would.
And in the context of a rate case, partially projected test periods are allowed. Is that correct?
Yes, they are.
Okay. It's good to hear from you, Mr. Watkins. Thank you very much, and that's all I have.
Thank you.
Commissioner Gray,
Thank you, Mr. Chairman, and Mr. Watkins for that input. Can you hear me all right?
Yes, sir, I can.
So I'm just curious, are GAAP accounting principles applicable to Tidewater's financial accounting practices?
For their financial reporting, absolutely. For rate making, absolutely not.
So do GAAP principles and compliance require that both earnings and costs be accounted for within the same time range, monthly, quarterly, or annually?
Well, under an accrual method, you get into a lot of squishy stuff, but theoretically, under an accrual basis, you're supposed to match revenue collections, revenues with cost incurrence.
Is that the approach you would have expected for the posting of these adjustments by Tidewater?
Not so, the short answer, Commissioner, is yes, but not so much in accordance with GAAP, but within accordance with accepted regulatory practices throughout the country and, common sense, proper rate making so that you're matching both revenues, costs, and investments all at a reasonable time period. In other words, you wouldn't want to state revenues as of 2021 and inflated costs as, and I'm exaggerating, 2023. Clearly, there's a mismatch, and we've all heard that often used term, the matching principle.
Thank you. And so, just in conclusion, what do you believe this approach has resulted in this particular situation?
Although I can't put a specific value to it because I don't understand, like I said, how they determine some of these, but it is apparent and obvious to me that it is a clear attempt to reduce its earned rate of return simply because of the show cause order that the commission ordered for Tidewater. For years, Tidewater has been providing its rate of return statements. Those statements are the basis upon which the commission should and must evaluate the financial performance. We can't go and audit every single quarterly report. We have to rely on what's reported to them. But I think what's most important is if you go back and look, Tidewater has been significantly over-earning every year since 2017. And in fact, their last rate case was 2014, and every year except for one, Tidewater is significantly over-earned, including up through June 30th of 2022. Now, all of a sudden, as a result of this show clause order that you gave, Tidewater attempts to say the sky is falling. We're not gonna make enough money. I find that very dubious at best.
All right, thank you, Mr. Watkins. Mr. Chair, I have no further questions.
Ms. Iori, is there another witness you wish to call?
No, thank you.
Ms. Scott?
Commissioners, may I be excused?
Are you a doctor or are you a mister?
No, I don't have a piled higher and deeper. I'm just a mister.
Okay, well, thank you, Mr. Watkins.
Thank you, Your Honor. Bye-bye.
Ms. Scott?
Ms. Scott, may I please, sorry for the interruption, can you please move right in on that mic? Thank you.
We get complaints about that, so
Understood.
we've been pressed to encourage people to speak into the mic.
Sir Connor, please raise your right hand. Do you swear that the testimony you're about to give should be the truth, the whole truth, and nothing but the truth?
Yes.
Could you state your full name for the record, please?
Yes, it's A. Bruce O'Connor.
And could you give your employment address, please?
I don't know the zip code. My address is 1100 South Little Creek Road, Dover, Delaware. Zip code is 19901.
And what is your position with Tidewater Utilities?
I'm the president of Tidewater Utilities, Inc.
How long have you held that position?
I've been president since January 1, 2019.
And in your role as president of Tidewater Utilities, are you involved in overseeing and analyzing financial reports and financial records?
Yes, I am.
And in connection with the response that Tidewater filed with the commission on August 3rd, there is an Exhibit A attached to that document, is that correct?
That is correct.
And is this a document that you prepared?
Exhibit A was prepared under my supervision.
I would like for you at this time to explain what Exhibit A is, which again is attached to Tidewater's opposition response.
Exhibit A shows various reporting periods of a rate of return, rate-based calculation, beginning with the 12 months ended December 31, 2021, continuing on through the first quarter of 2022, and then by month through June 30, 2022. And then to the right side of Exhibit A, there were adjustments made to the results from June 30, 2022 to arrive at the column that's described as pro forma ROR, which is rate of return.
In terms of the column entitled Prospective Adjustments, can you walk through for us what those adjustments pertain to?
Yes, I can. So begin at the top of the schedule for operating revenues. The adjustment there was to take the the customer count as of June 30, and based on average consumption for our customer base was to, in effect, annualize those customers that came on to the system during that 12-month period ended June 30, 2022. The next adjustment is a combination of several adjustments, and that's under the category of operations and maintenance. The items under there are...
Mr. O'Connor, excuse
Yes.
my interruption, please. Mr. Chairman, I have a big stack of paperwork in front of me that's labeled with numbers, not with letters. Are you reading from
That's
something
not-
that we
is
have?
not from us.
Okay, so we don't have what you're reading from?
I have
We do?
copies. It was attached to, may I approach?
Commissioner
Well,
Gregg?
Ms. Scott, we do have the piece, we do
I'm
have.
sorry. I'm
It is
sorry.
We do have,
It's attached to the opposition of Tidewater to the verified position that was dated August 3rd.
Ms.
And
Iori,
is-
does it have a number on it?
I don't know whether it does, but if it does, it would be number 5.
Just a moment, please. Sorry for the interruption, Mr. Chair. Scott, I really apologize for interrupting, but I think I found what you're referring to now. Thank you.
Put it right here. So the category of operations maintenance, those adjustments there are several. There's tank painting, and Mr. Watkins had indicated that he was unable to locate that information in the detailed trial balance that was provided. Unfortunately, those were not just one number in the trial balance. There were a combination of several accounts in that area that would have added up to that $2,162,719. And that's the support that we thought was available. The next categories are for chemicals, caustic, and hypochlorite. We didn't change the volumes of those chemicals that were needed during the test year, but we did take the most recent cost per gallon for those, and that's how we came up with those calculations and compared it to the amount that was actually in the 12 months ending June 30, and that resulting calculation was the adjustment that we reflected on that schedule. The same thing holds true for purchase power. We have received notification from the City of Dover as well as the Delaware Electric Cooperative that they plan to put in rate increases in September of 2022. And an additional increase was put in place by the Delaware Electric Cooperative in February of 2022. So a combination of those three increases are what's reflected in that adjustment.
That's the, not to interrupt, but that's the $2,174,592.
Those are the components
Right.
that'll
That's
get you
what
up
adds
to the
that.
$2,174,592. The next two adjustments represent fuel costs for our fleet of over 100 vehicles, and as well as fuel for the generators that are used to run our plants in the event of a loss of power. And we took the cost per gallon through the end of June to come up with, without changing the volumes of the fuel, to come up with what those costs would be on a pro forma basis. And Mr. Watkins is correct that the purchase order reflects a notice from the City of Dover for purchase finished water that we buy from them for customers in and around the City of Dover. That was a 6% increase. The biggest component of that $2,000,001 O&M adjustment, operations and maintenance, does involve our workforce. We have 17 open positions that we're actively trying to fill, and we've been struggling. And part of the reason is because of the salary levels that we have been offering candidates to join us, and to Mr. Watkins' curiosity that he didn't understand what a market adjustment was or salary guidelines. That it's basically a review of the salary we assign to grade levels for employees that join us, and we've made some initial market adjustments to increase that, and we're trying to finalize that study to determine whether we need to increase those further. And along with those positions come not only the salary increases, but the benefits associated with that, because the compensation package that we need to offer prospective employees has to be competitive with our peers in the water business, our peers in the gas and electric business, and even our peers, they're now our peers in plumbing and heating companies. The last adjustment has to do with business insurance. I had thought that we had provided sufficient information to Mr. Watkins, but if not, then we apologize for that. But that reflects an adjustment that was made by the Workmen's Compensation Insurance Audit. That's an annual audit performed by them. This year, it was a credit, and we were removing it because it's a one-time occurrence. With regard to the depreciation adjustment, we did, to Mr. Watkins' point, we did take an annual depreciation component for the utility plant that we're adding on a pro forma basis, as well as brought any additions that were made during the 12 months ended June 30, 2022. We did bring those expenses associated, the depreciation expenses associated with those projects to a full year. So that's the adjustments for the operating income. The next component is rate base. I'm not quite sure regarding the confusion Mr. Watkin has with the utility plant that we've reported, which comes from our books and records, to the 10 million gap that he claims there is. We would be more than happy to talk with him about that and show him how the numbers were arrived at. The adjustment for the utility plant does involve costs that has yet to be incurred for two large projects that are in the middle of construction, and they both are elevated storage tanks in the Sussex County area of our territory. One is in Millville, and one's in the southern section of what we call our Rehoboth service territory. We've spent over $5 million to date for those two tanks, and perhaps this might be where Mr. Watkins has that gap of 10 million, because the total expected cost for those two tanks in total is approximately $10 million. The other adjustment under rate base for accumulated depreciation, to Mr. Watkins' point, that's a mechanical calculation. Whatever depreciation expense you take, it rolls through ultimately into that category. And the same thing is true with the deferred income tax adjustment. That is mechanical. With regard to cash working capital, we do use the 1/8 method for pro forma purposes. In talking with my director of rates, in the 2013 rate case, which is the most recent base rate case for Tidewater Utilities, we utilize a lead lag study to develop cash working capital in that matter. But to undertake a lead lag study on a quarterly basis is an extreme amount of work and effort. And we believe that the 1/8 method gets us within a reasonable range of what a lead lag study would arrive at. Lead lag study, it's running computer models, printing out and doing a bill analysis for every customer. And the same thing is true on the expense side, is to run a bill analysis for every invoice you receive and calculating either the lead time or the lag time, depending on which item you're looking at. But those are my explanations for Exhibit A.
And based on Exhibit A, that is how you develop the revised rate of return based on pro forma adjustments of 7.505%, is that correct?
That is correct. I do have some information on the projects, if the commission would be interested in knowing about them.
There's no question pending.
Would you like to give a little bit of detail about the two projects that are under construction at the moment? I believe you said one was located in Millville and one was in Rehoboth area.
Yes. I have some photos I'd be willing to share with the parties. There's actually, I think in the prior hearing for this matter, it was indicated that Tidewater had referenced 4 large projects for which no detail was provided. This handout shows 4 projects that we had alluded to in our filing. 2 of them are the elevated storage tanks I described, one being in Millville and the other being in the southern section of our Rehoboth area. But the other 2 projects are the Angola-Rehoboth interconnection, and the 4th one is what we call is the Bayside Wells and Treatment Facility improvement. So those projects, 2 of them are in service. They went in service from the interconnection between Rehoboth and Angola, and the Bayside Wells and Wells and Plant went in service as of June 30, 2022. Those 2 particular projects sum up to just under $5 million. And as I described earlier, each of the tanks, the elevated tanks, are expected to be, at completion, cost $5 million each. Those projects I just described, the 3 of them are specifically to enhance reliability and redundancy and support fire protection. The 4th, which is the Millville tank, that's a combination of providing resiliency and fire protection reliability, as well as the customer growth in that particular part of the system.
Mr. Chairman,
Yes, sir. Commissioner Ray.
I have a question for Mr. O'Connor. Mr. O'Connor, thank you very much for this information. If I look at this same Exhibit A and I look at your operating revenues coming to your prospective adjustments on the revenue stream, through what date of the year is your revenue adjustment quantified?
The revenue adjustment is made based on the customer count as of June 30 and annualized as of June 30. So if we had a customer that came on board, say, January 1 of 2020, and based on their average usage across our customer base, we would add 6 months' worth of revenue associated with that customer. If the customer came on board on June 1st of 2022, we would be adding 11 months' worth of revenue for that customer.
Okay, the second scenario again, if a customer came on in June?
So if they came on June 1st,
Yeah,
so essentially 1/12 of the year, we would get the other 11 months and put it into the test, into the operating income for the year.
so this revenue adjustment is assumed to take your revenue projection through December 31st, 2022, or through June 31st, 2022?
Through June 30, 2022. It takes the customer base at that point in time, and based on the average bill for a customer, that gets us to the adjustment of $1 million.
But I'm still confused. Is that $1 million through 6 months of this year, through 12 months of this year?
It's for the 12 months ended June 30, 2022.
So it doesn't take you to December 31st, 2022?
That's correct.
All right, and on some of these other adjustments, like operations and maintenance that you described for me, do those costs run through June 30th, or do those costs run through December 31st?
They run through June 30, 2022 on a pro forma basis. So we're taking the units, for example, caustic soda, which is one of the adjustment items for chemicals, or even the hyperchloride, which is a chemical adjustment. we're taking the gallons used in the 12 months ended June 30, 2022, and we're applying the cost per gallon as of June 30, 2022.
And you're making the adjustment through 6 months of 2022 or through 12 months of 2022?
It's as of June 30, 2022.
So you're only taking the cost impact to be adjusted through June 30, 2022?
Yes.
Okay. That's not what I thought I heard with the other witness, but I don't think they're here now. Thank you.
Commissioner Drexler?
Mr. O'Connor, I have a question about the two adjustment items under operating income. I guess my question first is regarding depreciation. The actual depreciation of 4.6 million was then adjusted for the 665. That depreciation was actual depreciation through June 30th of 2022, or because, and I think that Commissioner Gray might be addressing the same thing, because what our understanding from Mr. Watkins' testimony was, this 665 relates to new in-service projects or existing projects. I guess, what comprises this depreciation adjustment?
So the depreciation shown on schedule, on page 1 of Exhibit A, which is the 4,666,000, that's the actual depreciation expense for the 12 months ended. So if we put a project in service on June the 1st, there would be 1/12 of depreciation in that 12 months ended. The 665 is designed to capture 11/12 that wasn't in my particular example here, was to capture that for the pro forma information. Also, there should be depreciation associated with the 4,228,000, which is shown below as an addition to utility plant. So that those components should make up that 665,000.
Thank you.
Ms. Ivory?
If the commissioners are finished asking questions, I don't want to step on anybody's toes, but I do have some for Mr. O'Connor, if now would be an appropriate time.
It's a great time, please.
Okay, thank you, Chairman Winslow. Mr. O'Connor, you provided a lot of detail regarding these proposed prospective adjustments. Where in either of your oppositions to the DPA's motion would we find all this detail?
So, I'm not sure I understand the question.
Well,
if
where
you're
is it in
looking-
your where is it in your written oppositions to the DPA's verified petition?
So if I can offer an example, maybe, are you saying?
Well, no, I'm asking you, did you include any of this detail in your written submissions to the commission?
We did not provide, for example, invoices that showed the.
That's not
increase.
what I'm asking, because you didn't provide any here either. Where is the description of all of this detail in your written submissions to the commission?
There isn't any, I guess.
Thank you. Where in Exhibit A would we find the support for the tank painting adjustment?
Other than the gross number,
Other than the gross number?
it would be, it's not part of the Exhibit A.
Okay, thank you. Who prepares the quarterly rate of return reports for Tidewater?
It's prepared by the Director of Budget and Rates.
And do you review them before they're filed?
Generally, I do, yes.
Isn't it true that Tidewater has never filed anything like Exhibit A with any of its quarterly rate of return reports?
Yes, that's correct.
permission to approach the witness?
Granted. He's the only correction.
Yeah, but I can't get through there, it's too bad.
Oh,
This way.
I would have come to you.
Oh, I could have come out. I need the exercise. Mr. O'Connor, I'm showing you what, council have stipulated as Exhibit 8. And, do you, know what that document is?
Yes, I do.
What is it?
This represents a rate of return report that Tidewater had submitted on August the 4th, 2022, through the Delafile system.
Okay, did you review this before you filed it?
Unfortunately, I did not review this one.
Do you know who did?
I believe it was my Director of Budget and Rates.
Okay, and did they have your authorization to file it?
They didn't, but they don't necessarily need my authorization to file it.
Okay. All right. Do you know when Tidewater filed its opposition, second opposition, I should say, to the DPA's verified petition?
I'm sorry, could we
Do you know the date on which Tidewater filed its opposition to the DPA's verified petition?
Yes, I'm sorry, August the 3rd,
Okay.
2022?
The report that's been marked as Exhibit 8 doesn't have any pro forma adjustments, does it?
No, it does not.
Okay. You testified that you used the 1/8 method for cash working capital in Exhibit A, correct?
Yes,
Are you familiar with the commission's minimum filing requirements?
I don't know them chapter and verse, but I'm familiar with them.
Okay, are you familiar with Part E, subsection 4.3 of the minimum filing requirements?
I don't know. I'd have to see them.
All right, would you accept subject to check that subsection 4.3 provides that the quarterly rate of return report shall show the jurisdictional actual and/or adjusted rate base, earnings, and overall rate of return based on the elements, methodology, and allocation factors utilized in the most recent rate case or updated for more current financial data, including pro forma adjustments?
Yes, that sounds very familiar.
And did the company use the lead lag methodology for calculating cash working capital in its last rate case?
Yes, we did.
But you didn't use it in creating Exhibit A, correct?
That is correct, as I explained earlier. Yes.
Now, you talked about some water tanks. The ones that went into that you discussed going into service in June are included in your June 30, 2022 results, correct?
I'm sorry. Could you repeat that?
The 2 tanks that you testified went into service during June of 2022 are already reflected in the plant reported in your June 2022 quarterly rate of return report, correct?
So I don't believe I said those tanks are in service.
I'm sorry, I misheard you. So they are not in service?
That's correct.
Okay. Now, I think there's some confusion over what pro forma actually means. And I believe you responded to Commissioner Drexler that the numbers on Exhibit A reflect results for through June 30, 2022 on a pro forma basis. Did I get that right?
The last column,
Is that what, now I'm asking you, is that what you said?
to answer Commissioner Drexler's question, I'm not sure that she asked me that question.
I think she did.
She asked me about the depreciation,
No, she
And I
did
was-
ask,
And I explained. the
all right,
depreciation.
maybe it was Commissioner Gray, my apologies. Do you remember having that discussion with either Commissioner Gray or Commissioner Drexler?
I do remember a conversation with Commissioner Gray, yes.
Okay, so, back to where we started on that. You testified that the figures on Exhibit A reflect results for June 30, 2022, for the 12 months ended June 30, 2022, on a pro forma basis, correct?
Yes,
And pro forma basis means adjusted, basically, correct?
yes,
And is it not a fact that several of these adjustments have the effect of bringing or of increasing expenses that Tidewater would incur through the end of 2022?
yes.
Thank you, nothing further.
Ms. Scott?
No questions from staff.
In terms of the rate of return report that was filed just recently, has a revised report been filed by Tidewater?
Yes, it has. It came to my attention that the rate of return report that was filed on August the 4th was a premature submission by Tidewater. And Tidewater has subsequently filed a revised rate of return report to the commission through Delafile.
And does that revised report include pro forma adjustments?
Yes, it does.
Prior to this particular proceeding, how has Tidewater filed its quarterly rate of return reports? Have there been any adjustments associated with them?
Yeah.
Asked and answered. I asked him that very question on cost.
May I ask?
Yes, please continue.
So prior to the June 30, 2022 rate of return submission, the reports that Tidewater would file had adjustments in it for construction work in progress and the cash working capital.
But no other potential pro forma adjustments that could have been available?
Correct.
And can you give some background as to why that was?
Other than with the quarterly report, our efforts were focused generally elsewhere to filing the financials, and the information just wasn't gathered and put together and submitted as part of the quarterly reports.
Relative to the Exhibit A that was attached to Tidewater's response to the petition that was filed on August 3rd, did we receive a request for backup information from the public advocate's attorney?
Objection, this was not asked on cross. She is limited on, limited on redirect. I didn't ask anything about what what Tidewater provided to us.
The objection is sustained.
Do you have, I don't have any further questions at this time.
Do you have any further witnesses?
Do you know?
Mr. O'Brien, any witnesses?
No, staff does not have any witnesses, but we would like to provide some comments at the appropriate time. Thanks.
With all due respect, then, if staff isn't going to have a witness, then its memo should not be part of the record.
Well, I think that's a good comment. I was a little bit surprised. I thought that Mr. Bowman was basically going to go through his memoranda and inform the commission about the state's position. Otherwise, it's not part of the record as far as I can see. It's been submitted but not made part of the record. So I don't know if Mr.
Yeah, I
O'Brien-
should have stated, Mr. Chairman, that Mr. Bowman is available for questions. It's just that the memo speaks for itself, other than some context that we hope to provide from a legal comment basis. But he is available for questioning if anybody has any questions, and we can have him sworn in.
Are you
This is
all-
completely inappropriate. He took a position in a memo that was submitted to the commission, fully intending for the commission to give that memo consideration. And if he is not going to stand cross on that motion, then it should, on that memo, then it should be removed as an exhibit in this proceeding.
Well, I agree with you, but I think I'm trying to give Mr. O'Brien the opportunity to call a witness and offer the memorandum. I mean, we've read it.
Oh,
You know we've read it.
yeah, I've said all along that he is available for questioning if anybody has questions. It's just that whether or not staff has a witness, staff's job is to make recommendations to the commission for every matter before the commission. We wouldn't be doing our job if we didn't provide a recommendation.
There have
And
been,
especially in this type of proceeding, where none of these commissioners has seen this type of proceeding, a 310, we thought it was important to provide alternatives to the commission, which we did in a memo.
There
But
have
again,
been-
we can put him on the stand and people can ask questions. Would the court reporter please swear in Mr. Bowman?
may I
Ms.
just,
Ivory?
may I just correct one thing that Mr. O'Brien said? That staff is expected to give a recommendation on everything that comes before the commission. It might be expected to, but it does not give a recommendation on every matter that comes to the commission. They have been utterly silent on some matters that have come before the commission. Thank you.
Well, that's exactly what I was going to say, is my recollection is in this very matter that we didn't have any guidance from the staff, but I'm not positive, but I believe that's the case. In any case, I think the most important thing, to be honest with you, is having a full record and hearing from Mr. Bowman. I have some questions I want to ask him. So, Mr. O'Brien.
Mr. Chairman, I'm having a hard time hearing, but I would
Okay.
like to respond to that. If you're referring to the earlier orders in this matter itself, we can go through each of those if you'd like. This has been on a very tight schedule. And as you know, staff cannot just take an advocate's position and put anything in the record. We have to consider all sides before we form a recommendation, because that's what the commission has to do. In the two prior meetings, Tidewater's responses came in after the package was due. So we met in both occasions and prepared oral remarks in those cases, and we're prepared to give those oral remarks, but we weren't called upon. Now, that's fine. The commission doesn't need to call upon staff in every matter, so it's not that we're complaining, but we are always prepared with a position or remarks concerning when we will have a position. And we've always said that we would have a position once the substantive matter of the 310 investigation itself was put forth. And that is why we put on the agenda that we would have a memorandum last Wednesday. But of course, we couldn't come up with a position because half the case had not been considered yet, half the case being Tidewater's response. That came in on Wednesday. And just like the prior two meetings, where their position actually came in after the package stage, staff did get together, comment, and were prepared, but we weren't called upon.
With all due respect,
Wait,
Chairman,
one second here. Gloria, please swear in the witness, and Mr. O'Brien,
Mr.
you can
Chairman.
then proceed. Mr. Gray.
Sorry, Mr. Chairman, for interrupting. Could I please request a 5-minute break just before we swear in Mr. Bowman?
Certainly.
So that I can
5-minute
sit
recess.
comfortably through his testimony. Thank you, sir.
Yeah, no, I understand.
Thank you, sir. Thanks, everyone, for your patience.
We certainly want you to be comfortable.
I think I better not say anything else. We are now back into adjourned. We're back in our meeting, and we have Mr. O'Brien and Mr. Bowman.
Mr. Bowman, please raise your right hand. You swear that the testimony you're about to give shall be the truth, the whole truth, and nothing but the truth?
Yes, ma'am. Yes, ma'am.
Mr. Bowman, did you prepare the memo that's been admitted as an exhibit in this proceeding?
Yes.
And Mr. Bowman, did anything you hear today change your recommendation or the alternatives that you provided to the commission in your memo?
No.
Okay, I do have a question for you,
Excuse me,
Mr. Bowman.
Mr. O'Brien, excuse me for a second, Mr. O'Brien.
Yes.
All of those out there who are listening, would you kindly put your machines on mute? I hear some noise in the background. Sorry, Mr. O'Brien.
Mr. Bowman is available for cross.
Ms. Scott, do you have any questions of? You do? Do not? Ms. Iwory,
I have a few.
please ask them.
Good afternoon, Mr. Bowman. Well, let me rephrase this. Does the same staff analyst review one particular utility's quarterly rate of return reports when they are filed?
Yes.
So are you, or were you the analyst that was assigned to review Tidewater's quarterly rate of return reports?
No.
Can you tell me who was?
Yes. So, public utility analyst Amy Willie reviews Tidewaters.
And has she reviewed them since she became a public utility analyst with the commission?
I believe so.
And do you recall when that was?
No.
Okay. Were you aware that Tidewater filed a revised quarterly rate of return this morning?
I was not.
Okay, thank you. Nothing further?
Ms. Scott, did that spark any questions?
It did not.
Commissioners, do you have any questions of Mr. Bowman? Commissioner Gray?
Good afternoon, Mr. Bowman. Thank you for the memo that you filed. I'm not sure this is for Mr. Bowman, but when I'm looking at the schedule that was provided to us, you've seen the operating income rate-based schedule Tidewater has submitted with their appeal to the commission.
Yes.
You've seen the rates of return that have appeared on this report since the fourth quarter of 2021.
Yes.
Do you or does anyone else in the room have an estimate of how much overpayment ratepayers have paid in dollars and cents?
I do not.
Ms. Iori?
I think we calculated that it would be $3 million for every 4 months. Wasn't that it?
Objection.
Could we go off the record for a moment? I do know that Tidewater's rates have not changed since they were approved by the commission in, I believe, 2014. So Tidewater did not over-earn in 2016. So they over-earned in 2014, 2015, 2017, 2018, 2019, 2020, 2021, and so far, all of 2022. Mr. Watkins calculated, as he testified earlier today that the 12-month, rate reduction would be 5.992. It would probably vary based on the amount by which they were over-earning. So I don't know that we can give you a definite number, but it would be large.
Mr. O'Connor, Ms. Scott. Mr. O'Connor, Ms. Scott, even with respect to your, Ms. Iori, thank you for that. Although, you know, 2014 is way beyond the scope of this schedule that has been
Oh,
submitted.
no, I understand. I wasn't suggesting, because you can't go back and make it up.
So,
I know that.
but I'm trying to get a range estimate here. I'm, you know, trying to represent the fact that ratepayers are in the room, even though they're not sitting at the table. And I'm trying to understand what the impact has been with respect to information and evidence provided by Tidewater. So, Ms. Scott or Mr. O'Connor, do either of you have a dollar quantifiable figure as to how much over-earning Tidewater has made, even within the range of your schedule, dollar-wise?
Commissioner Gray, the schedule you were holding up and showing there, whose schedule is that? Is that
This is
Exhibit
your
A?
Exhibit A, which has rate of returns 9.1 from fourth quarter 2021, 8.9 from 2022. I'm just trying to get, in my mind, a picture of what kind of dollar impact does this consequence have on the ratepayer? Just within the range here. I'm not going back to 2014. I'm just trying to quantify in my mind, what does this impact mean?
Well, Commissioner Gray, it's hard for me to quantify that. If nothing else, up until this second quarter of report, Tidewater didn't generally have extensive pro forma adjustments to its rate of return submission. So to get a true picture compared to what we're filing on Exhibit A, we would have to go back to those prior quarterly reports and make similar assessments of pro forma adjustments before we could arrive at what we think would be the number you're looking for.
But Mr. O'Connor, doesn't that appear to be hunting for costs so that you bring a rate of return within compliance? I mean, it would seem to me that if you're doing the financial reporting, you're doing it with due diligence such that you would catch those adjustments along the way. Would that not be reasonable to expect?
Commissioner Gray, my primary responsibility with regard to the financial statements is to make sure that they're prepared in conformance with generally accepted accounting principles. The preparation of the rate of return report is not in accordance with generally accepted accounting principles. There are elements of it that comprise it, but it's not a GAAP report. So it's an adjustment. There are adjustments that are being made to GAAP financials to arrive at a rate of return.
Okay, I get it. So thank you very much. Mr. Bowman, can you please summarize high level the recommendations you're making or the options you've provided the commission in your memo again?
Yeah. So, in the memo, I kind of laid out, after discussion with staff council and staff management, what we kind of thought were the three options to move forward after.
I'm sorry, may I interject before you start?
Yes.
Just to clarify. Commissioner Gray asked if you had seen this Exhibit A before today. Is that correct?
Yes, I've seen Exhibit A.
Okay. Oh, you had seen Exhibit A, because when you go to page 3 of your memo and you talk about the as adjusted ROR, that's based on this that you had seen.
Yes.
Okay, that's all I needed to know. Thank you.
Yes,
Please proceed.
sorry.
Thank you. Appreciate that.
So yeah, I laid out what I thought were the three most realistic options for the commission to go after seeing DPA's petition and then Tidewater's formal response on August 3rd. Option one was to accept Tidewater's, basically the Exhibit A as their second quarter rate of return report, as submitted, and as adjusted, and make the decision, I guess, if I'm allowed to say that, the commission would make the decision that that rate of return report, as filed and as adjusted, shows that the company would not be over-earning going forward, and therefore a 310 investigation or proceeding is not necessary, and basically just ending this matter as it is. Option two is if the commission, even after having considered the petition and considered Tidewater's response, is of the mindset that a 310 proceeding still needs to occur, the commission would need to decide how much of a temporary rate reduction to make, and how the 310 proceeding would go. And I just included in option two that 26 Delaware Code 310B states the power of the commission to order reduction in rates and charges of any public utility by means of such temporary order shall be limited to reductions which will absorb not more than the amount found to be in excess of the amount of operating income as determined by the commission necessary to provide a reasonable rate of return on the rate base of the public utility, or when appropriate, its operating ratio. So I then, said in theory the commission could set a lower temporary rate based on either the DPA's rate of return calculations with Glenn Watkins adjustments, removing the CWIP, or based on Tidewater's unadjusted rate of return, which is the 8.511%. But then I noted in there that the commission sets final rates based on a pro forma, in essence, basis per 26 Delaware Code 311, which basically says that the commission shall consider the revenue needs of the utility, its past and projected rates of return on its rate base, or when appropriate, its operating revenue. So, option two was basically me saying, if you want to go forward with a 310 investigation and you want to reduce the rates, you kind of have to consider pro forma adjustments in setting new rates, which the company included in their rate of return filing anyway. Option three was kind of like, staff's thought of meeting in the middle a little bit. You're basically would decline a 310 investigation, but get a commitment from the company on the record that they will file a case in January. And that was my formal recommendation, was to go that route. And I even referenced ordering paragraph number 2 of order number 10069, which states that the commission further finds that a proceeding to determine all issues involved in a final determination of just and reasonable rates for Tidewater will require more than 90 days. The commission notes that Tidewater has filed a notice of intent advising the commission that it intends to file a general base rate case no later than January 2023, during which rate case the justness and reasonableness of Tidewater's rates will be determined. So, if the commission went that route, per that paragraph of Order 10069, they would basically be using the rate case, the to-be-filed rate case of Tidewater, basically as the 310 determination of just and reasonable rates. And during that time period, you're going to have, or by time period I meant during that rate case process, you're going to have Tidewater filing a rate case based on a test year and a test period. And the test period is going to include pro forma adjustments and probably even a partially projected test period. And so you're going to consider that in a rate case. What's the difference between considering that now with their rate of return filing, including pro forma adjustments? So my recommendation was to use option 3, which would basically be holding off on issuing a 310 investigation as long as Tidewater would commit on the record to file a case in January.
Now, would you go through numbers 1, 2, and 3 and tell us what happens to the consumer's money in each option?
So option 1, everything would basically just stay the same as it is. Rates wouldn't go up or down until Tidewater filed its next rate case, whenever that may be.
Does that mean that the ratepayers will not recover their money?
You mean the ratepayers wouldn't?
The money that's been the operating income that's been very robust, in other words, the ratepayers are paying too much. Option number 1, did they get any money back at all?
Option number 1 would be to basically deny DPA's motion, so there would be no rate reduction.
How about if they filed a rate case in January, would the DPA be able to fight for that money at that time?
No.
Okay.
The DPA would be able to fight the rate case in January. The DPA would be able to fight for the rates that the DPA thought were just and reasonable based on the time period in that rate case.
Typical rate case.
Right.
How about number 2?
Number 2, if the commission went the route of number 2, they would have to come up with a rate reduction amount, which the DPA provided an amount based on their calculation of Tidewater's earned rate of return without including CWIP. So the commission would have to decide whether to use that number or use the company's as filed or unadjusted 8.511%. And if you reduce the rates for that, and you would have to go through a 310 proceeding, which, according to ordering paragraph number 2 of order number 10069, the commission would plan to use the to-be-filed rate case of Tidewater to determine justness and reasonableness of Tidewater's rates. And the likelihood that that rate case would result in a rate decrease is probably less than that of which it would result in a rate increase. So the Tidewater customers Tidewater would be able to recoup all of that money that was reduced. Now, that's not saying that I'm not saying that a rate case would automatically result in a rate increase, but I don't think a company would file a rate case to reduce its rates. So there's risk. There's risk with number 2 that the customers' rates would be reduced only to turn around and pay back that reduction because final just and reasonable rates as determined through that rate case process will probably, I'm not going to say will definitely be, but will probably be higher than the rate reduction is. So, yes, they may have a lower rate for a period of time, but there's a good chance that Tidewater could recoup that rate reduction from the customers.
Thank you. I guess at this time, any more questions? I guess at this time, we should hear from the parties, the legal arguments. Does anybody want to take a break?
Mr. Chairman, I would have some questions from Mr. Bowman based on those questions that were asked, if I may.
Yes, sir.
Go ahead, Bill.
Okay. Mr. Bowman, just to clarify, is an authorized rate of return a cap on a company's earnings?
No.
Okay, so haven't we at least learned today that, or let me ask you, based on the requirements in the minimum filing requirements and the discretion that is left to the utilities, is it the end of the analysis simply to look at the way a company files a rate of return and what that final ROR number is in their quarterly report? Is that something that's reliable like a rate case would be?
No. There's much more detail in a rate case than there is on a rate of return report.
Could you just please speak right into the microphone?
Yeah.
So based on the MFRs, you actually do
Objection,
see
he's
rate of return
leading.
reports,
These questions are
some that
leading.
include CWIP,
He should
some
be
that don't
asking
include CWIP. Isn't that
non-leading
correct?
questions. It's his witness.
One second. Mr. O'Brien, would you please repeat your question? There's been an objection from Ms. Iori that your question was leading.
The question was, based on the discretion permitted in the MFRs, would it be reasonable for the commission to base rate decisions solely on how one particular company happens to file their rate of return report when they come in wildly different forms, all compliant with the MFR?
Objection, now counsel's testifying.
Well, I can answer the question, so I think all of the commissioners can answer that question, so we'll sustain the objection. I mean...
Okay, Mr. Bowman, what are some of the different forms of rate of return reports do you see from the various companies?
I am going to object to this line of questioning. This is not follow-up of what the commission asked. If Mr. O'Brien wanted to ask these questions, he could have done it on direct. It is inappropriate on redirect.
Mr. O'Brien...
Yeah, that's fine. We're just trying to assist the commission in its analysis. If the commission doesn't want to hear the answers, that's fine.
Well, I think that the objection was a reasonable objection that Ms. Iori made. I think it was appropriate. I think it's actually correct. And I think we should move on to the options if that's what you want to ask her the questions about. Hearing no questions, Mr. O'Brien's questions spark any other questions for the commissioners?
Mr. Chairman, thank you. It does raise for me, because one of the options actually suggested that we try and get a commitment from Tidewater to file a rate case by January. I'm not sure it's appropriate to ask now, but I'd be curious to know what they're thinking in this regard.
Thank you, Commissioner Gray. So when Tidewater filed their notice of intent with a honor before January 31, 2023, that was the date that we believed and still believe that we could put together a full and comprehensive application to be presented and submitted with the commission. That's our intention.
Is that in alignment, Mr. Bowman, with what you had suggested as an option for the commission to consider?
Yes.
I think that, Mr. Bowman, the way I read your option is that you want the commission to compel a rate case in January. I'm not sure if that's, I mean, I understand that that's what was recommended. I'm not sure if we have that authority. But I think what I'm hearing Mr. O'Connor say is that they fully intend to go ahead in January, but they're not positive about the future, and it's possible they might file it in March, if they're not ready in January. Is that correct, Mr. O'Connor?
Chairman Winslow, Tidewater would commit to file honor before January 31, 2023.
Okay, that's what Commissioner Gray wanted to hear, I think.
I'm sorry if I didn't make that clear the first time. Apologize.
Let's have some legal argument. And Ms. Iori, as you know, my concern is I think that Tidewater is a very well-run corporation, so well-run that they've overrun the income balance for quite a while, actually. And I see that as being something that's at the point of being inappropriate, and that something should be done by this commission. But obviously, I'm mindful of the recommendations made by staff and also the opposition of Tidewater. So lead us through it, Ms. Iori. Tell us what you think.
Thank you, Chairman Winslow and Commissioners. I'm going to go off my script for a little bit because I heard some things during much of the discussion that, one, that just flabbergasts me, and another that I just almost don't know how to respond to. The one that's flabbergasting is staff's apparent belief that the authorized rate of return doesn't cap a utility's earnings. That is exactly what it does. This company has a monopoly to provide service, and in exchange for that monopoly position, its earnings are capped because it's not out there competing with anyone. Notwithstanding that they have to fight about service territory, once they get that service territory, they have no competition. So I'm just amazed that staff takes that position. I just don't know how to respond to it. Secondly, I don't know whether the commission's noticed, but I certainly have. Everything that Tidewater has done in this is a reaction to something we did. For example, we told Tidewater, we were discussing with them to see if we could reach an agreement, to maybe reduce their rates without having to go through a 310 proceeding. Nothing happened with respect to that. So at 11 o'clock on whatever day it was, Mr. Slater emailed Mr. O'Connor and said that the DPA would be filing a Section 310 petition. 4 hours later, we got from Tidewater, or they filed their notice of intent to file a rate case sometime in January 2023. Coinkydink? I think not. So, we pull their quarterly rate of return for the most recent one they filed. The one that was filed the day after they filed their opposition with all of this Exhibit A prospective adjustments. And guess what? It's the same quarterly rate of return that they have filed every time. Every time. But now we hear, oh, we filed a revised one, and it looks like Exhibit A. Guess when they filed that? Today. And they didn't even have the grace to tell you that they filed it today. By not telling you when they filed it, They let you believe that perhaps we were trying to pull the wool over your eyes, and I bitterly resent that. A couple of more things on what Mr. Bowman said. Section 311 is inapplicable to a Section 310 proceeding. And except, Mr. Bowman I think I heard this right, posits his recommendation of not granting the DPA's motion, but basically ordering Tidewater to file a rate case before the end of January 2023, meeting in the middle. Actually, it is not meeting in the middle. So, now that I'm back on script, I did want to point out, Chairman Winslow, that I did a word check in this, and the word finally doesn't appear. So, starting with Tidewater's response. I want to remind the commission, although I think you've probably heard it, that in our petition and oral argument, we explained that the quarterly rate of return reports that Tidewater filed with the commission showed that Tidewater had been over-earning in every quarter for at least 3 years. Tidewater has not contested that fact, and none of its rate of return reports included any pro forma adjustments during this time. Now, you heard the excuse that Mr. O'Connor gave. Basically, I was too busy. But he also said that he reviewed them before they went out. So, I'll leave it to you to what you find to be credible. But you also may recall that during the July 13th argument, I gave you a handout prepared from Tidewater's quarterly rate of return reports since its last base rate case, which showed that the company has been over-earning every year since 2014, with the exception of 2016. Tidewater hasn't contested that fact either, and again, no pro forma adjustments in any of the quarterly rate of return reports that it filed during this time. I don't know whether Tidewater is still going to push the argument that it has been denied due process. I am prepared to address that argument, but because I did not get the opportunity to do so in written submission, but if the commission doesn't want to hear it, I can skip over that because I know
Skip
we've
over
been
that,
here for a
please.
while. Okay? All I would say is that they can't seriously contend that they've been denied due process in this case. Tidewater next argues that because it will file a rate case in January 2023, the DPA's petition is moot and unripe. Tidewater misapplies both doctrines. Its stated intent to file a rate case in 2023 is not, or January 2023, is not a given, even if it pinky swears to the commission. A lot can happen between now and then. Meanwhile, Tidewater's ratepayers will continue to overpay for their water service, overpayments that they cannot get back because of the prohibition against retroactive rate making. If Tidewater does come in January 2023, there's likely 6+ months of unjust and unreasonable rates that ratepayers cannot recover or be credited for. The DPA can't take the position that we're going to add X number of dollars of revenues that you overcollected from September 22 through whenever Tidewater's test period revenues are to make up for the overcollection. There is no true-up available to ratepayers, but there is a true-up for Tidewater. Section 310D specifically provides for that. I've made that argument before. I will not beat it to death again. Even if the matter was technically moot, which it isn't, there is a well-recognized exception to the mootness doctrine for matters of public importance. I dare say that Tidewater's ratepayers would find unjust and unreasonable rates to be a matter of great importance to them. The matter is also ripe for decision. The Supreme Court has stated that a ripeness determination requires a common-sense assessment of whether the interests of the party seeking immediate relief outweigh the concerns of the court in postponing review until the question arises in some more concrete and final form. The DPA's interest in seeking immediate relief for Tidewater ratepayers outweighs the Commission's concern in postponing review until Tidewater files its rate case. Again, if you decide in the DPA's favor, and it turns out there shouldn't have been a rate reduction, state law provides a clawback for Tidewater to get those dollars back. But if you decide in Tidewater's favor now, ratepayers can never get those payments back. They will be permanently and irreparably harmed. Last, despite Tidewater's attempt to make it look like it's not over-earning with its myriad prospective adjustments, Tidewater is over-earning, and this commission and this staff knows that it's over-earning. And as you may recall, Tidewater admitted at the July 13th argument that it was currently over-earning. But then, on August 3, just 21 days later, Tidewater says it's really not over-earning. Proof, Exhibit A to its opposition. They say, if you make the adjustments that we would propose in a rate case, we're not over-earning. Now, regarding those adjustments, you heard from Mr. Watkins that we don't know exactly what the adjustments were or what they represented. So we can't say that they are all commission-approved adjustments. But based on what we have been able to figure out, we know that the commission has previously rejected some of the pro forma adjustments Tidewater made. We know that Tidewater's per books and adjusted rate of return includes QIP, which this commission has long excluded from rate base. Including QIP in rate base not only deviates from this commission's long-standing policy of excluding QIP from rate base, but it also decreases Tidewater's proposed per books and adjusted rate of return. We also know that Tidewater's adjusted rate of return includes projected post-June 30, 2022 plan additions that may or may not go into service when Tidewater expects them to. When those plant additions are excluded, the rate of return increases. We also know that Tidewater's pro forma depreciation expenses are overstated because the company included a full year of depreciation expense associated with its future plant addition. In other words, Tidewater's proposed pro forma depreciation adjustment for future plant brings its depreciation expense all the way out to June 30, 2023. With regard to revenues, Tidewater utilized the number of customers as of June 30, 2022, and made a revenue adjustment based on average consumption multiplied by the current number of customers. However, with regard to numerous O&M expenses, Tidewater's proposed pro forma adjustment includes half or a full year of proposed cost increases. That would bring O&M expenses to a level as of December 31, 2022, while at the same time maintaining pro forma revenue adjustment at June 30, 2022. As the DPA pointed out during the July 13th meeting, Tidewater has and is experiencing significant customer growth, but it doesn't go past June 30, 2022 to project customer growth. There is a significant bias in Tidewater's pro forma expense adjustments. When all is said and done, the fact is that Tidewater's adjustments are designed to make it look like it's not over-earning. But as Mr. Watkins testified, simply removing the QIP from the rate base that Tidewater reported on August 4th results in an overall rate of return of 9.173, which is above the authorized rate of return. And even if you include QIP in it, it's still above the authorized rate of return at 8.511%. Moving on to staff's memo, whose timing is more than a bit curious. Staff knew that DPA was planning to file this 310 petition before we filed it. We told them as a courtesy because we think it's important to have a good working relationship with staff. We filed our petition on June 22nd. The argument on whether to open the docket occurred on July 13th. Staff had 20 days to figure out its position if it was going to take one. The Administrative Procedures Act says 20 days is sufficient time, but the commission may recall that staff didn't have a position at the July 13th meeting. Now, staff stated that it, quote, became aware, end quote, of Tidewater's over-earning in 2021 when it was performing its annual audit of Tidewater's DSIC applications. Surprising admission, it should have known long before that because it had the quarterly rate of return reports demonstrating the over-earning. You may also recall that these reports are never provided to the DPA. We don't even receive notice that they're filed. We have to go manually into Delafile and get them. So just as this commission relies on staff to ensure that the utilities it regulates are complying with commission rules and orders, so does the DPA to an extent. Additionally, staff has often told this commission that it represents ratepayer interests. I've been here when their representative has said that, and so have you. You may recall that staff filed a motion back in 2013 on behalf of Delmarva Power and Light Company ratepayers to open a docket to consider Delmarva's infrastructure spending. Staff's memo says they have reviewed all the documents, but it doesn't say what documents it reviewed. But it apparently accepted those pro forma adjustments lock, stock, and barrel without any investigation. And while staff does note that Tidewater can recoup underpayments, it completely ignores the fact that if the pro forma adjustments are inappropriate, which they are, and Tidewater is over-earning, its customers are barred from recovering the money that they have paid. So staff's recommended resolution is to deny the DPA's petition and order Tidewater to file a rate case by the end of January 2023. But what's the downside to Tidewater if it doesn't file its rate case by January 31, 2023? What's the commission going to do about it? Staff, like the commission, has the responsibility of balancing the interests of ratepayers and utilities, but its recommendation doesn't balance ratepayer interests at all. Therefore, the DPA respectfully submits that the commission should give no consideration to staff's position on this matter. Finally, regarding staff's, that wasn't in my script. It was habit. Regarding staff's comments on and concerns about the confidentiality of these reports, too little, too late, the commission has already determined that Tidewater's financial reports were public for purposes of this motion. If staff had a position on the DPA's confidentiality motion, it should have responded to it, just like Tidewater did, or it should have spoken up at the July 27th argument on the motion. And if staff's saying, well, the commission didn't call on us to speak, that's on them. It could have made the commission aware that it wanted to be heard. This is essentially a motion for re-argument without having filed a motion for re-argument on a matter on which staff took no position that it made anyone aware of. Its ruminations on how the commission's decision might affect other utilities is irrelevant to this proceeding because all we were asking for, and all the commission ordered, was that the confidentiality designation be removed from Tidewater's reports for this proceeding. And that's what I told the commission on July 27th. I also told the commission that we would deal with other utilities' confidentiality designations when and if they became an issue. So in closing, neither Tidewater nor staff have proffered any good reasons for not reducing Tidewater's unjust and unreasonable rates now. I have to repeat this. Tidewater will not be harmed by a rate reduction pursuant to Section 310 because if it turns out that rates shouldn't have been reduced, it will get that money back. But if it turns out that the DPA is right, and we wouldn't be here if we didn't think we were, and rates should have been reduced to a just and reasonable level, customers will be permanently and irreparably harmed because they cannot get that money back. Every dollar over-collected from customers matters, especially now. Commissioners, it is your job to balance the interests of ratepayers and the companies that you regulate. Erring on the side of a utility that has legal recourse to recover possible revenue foregone as a result of this proceeding is not balancing customer interests. It is utterly ignoring them. Where the utility will not be harmed if you make the wrong decision, but ratepayers will be permanently and irreparably harmed if you make the wrong decision. We respectfully submit that the only decision you can make is to immediately and temporarily reduce Tidewater's unjust and unreasonable rates pending a full determination of just and reasonable rates. Thank you.
Finally, would you tell us on the record and confirm what you're asking for rate-wise?
We are asking for a reduction of, in rates of $2,247,214. We would obviously need to work with the company as to how that would be spread across, and that would remain in effect pending Tidewater files their rate case, or if they decide they're not going to file it anytime soon, then we will need to schedule a proceeding before the commission.
Thank you.
Thank you.
Ms. Scott?
Thank you, Chair Winslow and Commissioners. I do take exception to the statement made by Ms. Ori that everything Tidewater has done here is a reaction to what the DPA has done. In fact, there are numerous conversations that took place between Mr. Slater and Mr. O'Connor about the situation with Tidewater's over-earning and when they would file a rate case that occurred well before we were told that they were going to file a 310 proceeding. I also disagree with Ms. Iori that Section 311 of Title 26 does not apply to Section 310. That's her opinion. This is my opinion. We conceded from the beginning that we have been over-earning. And we also said on the record, and we said it very clearly on the record today, that we would file a rate case by January 31st, 2020. We stand by that statement and we intend to file such a rate case. I would note that for purposes of our the minimum filing requirements do permit pro forma adjustments to be made to the quarterly rate of return reports. I think the language of 26 Delaware Administrative Code 1002, Part E, Section 4.3 is pretty clear. It was fully stated in staff's memo, and I believe that we made an honest attempt to look at our rate of return that had been filed and make appropriate adjustments to that on a pro forma basis. These adjustments basically reflect what we told you on July 13th. That our current over-earning situation was not going to persist. And we knew that because we knew what was coming forward. We knew the projects that we have underway now and how that is affecting our financial situation. We know about the situation with our labor workforce. We know about the situation with our fuel increases and all the other items that Mr. O'Connor talked about today. In addition to that, I would like to note that on a number of these adjustments, Mr. Watkins clearly indicated that he was not able to fully discern the detail behind the adjustments and couldn't really give much of an opinion on it. I'm not going to claim that we did not have due process here, but what I would like to very clearly point out to the Commission is that essentially we've been through what I would call a mini rate case in about a month's time. So this was a pretty quick turnaround, a lot of documentation that had to be gotten together, and I think that we did our best to provide documentation relative to this issue, but it was certainly a very quick push through the process. At the end of the day, this isn't really about is Tidewater going to be harmed or not. We also are concerned about our customers and what happens here, and we told you very clearly that one of the largest issues for Tidewater is the connection fees that are being charged. That's what's creating our over-earning situation. So if the Commission determines at the end of the day that it would be appropriate to do a temporary reduction of our rates, we need to look at the connection fees because that's what's creating the issue for us here. And we are going to need, if you do determine that there needs to be a temporary reduction, we are going to need to have some time when that becomes effective because obviously we are going to have to do some things on our end to implement that and put it in place so that it works. I continue to believe, as was indicated in staff's memo, that temporary reduction now could very likely get reversed once Tidewater files its rate case in January. But ultimately, that's a decision for the commission to make and to be comfortable with. And so I leave that up to you. But as we said previously, we are attempting to do what we think is appropriate and best, and the earliest that we conceivably can file a rate case is by January 31st, 2023, and we are committed to doing that. Thank you very much.
Thank you, Ms. Scott. I have one question, and that is that, as Commissioner Gray indicated, there aren't any probably Tidewater consumers. Maybe there's a staff Tidewater consumer in the room, but
I think there might be someone else here.
so we sort of are like here for besides the company, also for the customers. And, you know, Ms. Iori has pointed out very clearly, and I think she may have said it more than once, that some of the recommendations made by staff could actually harm consumers financially, arguably anyway. Why, out of curiosity, why hasn't Tidewater suggested a way around that scenario? If it's going to be very expensive to have a 310 plus a regular rate case, why didn't you all work through that? Why are we in this decision-making process right here? They're your customers.
We attempted to work through that with the DPA, Chair Winslow, but we couldn't come to agreement.
Okay,
We did attempt to do so. We did.
okay,
But we could not agree on where we ultimately ended up, and that's why we're here.
okay. Well, I appreciate you letting me know that, because I feel much better about it now.
No, we weren't attempting to ignore the situation. As I said, we've admitted from the beginning that we've been in an over-earning situation, and we know that we need to address it. And at this point, from our perspective, considering where we are today, August 10th, we believe that the way to address that is by filing our rate case on January 31st, where all of the issues are addressed.
Noted. And also the reaction situation, I think that's what happened here. You guys reacted, but I mean, they file a motion and you react by filing an answer, right?
Yeah.
And so, I mean, I think that's just a normal process. I don't see anything negative about the reaction. If my opponent does something in a basketball game, I react. Same thing you do in court, you react. There's nothing wrong with reacting. However, I would say that, just generally speaking, that my perception of the whole situation is that the numbers and the paperwork needs some thought and some revamping and improvement from the company. That's just my perception. And I also would say that my strong perception is that because of the length of time that the company's been over-earning, that we, you know, despite the fact it might be more expensive, and despite the fact that at the end of the day, in January, February, March, whatever it might be, that the money will be reduced, so to speak, to the consumer, I'm not in a position to prolong the customer's financial reimbursement situation. I just can't say I personally could do that. And especially with the prospect that they are going to not be able to recover some of the money that has been overpaid. So I really don't see any way to vote other than to follow what the DPA has recommended. But other comments? Mr. Graff.
Thank you, Mr. Chair. So I have one question for Mr. Bowman, and then I have a few statements. Mr. Bowman, I'm noting this Exhibit 8 where we get filing that shows a rate of return that exceeds the allowed rate of return by the commission. And I recall from Ms. Iori's comments, the over-earning has occurred since 2014. So what happens in the commission when you're given information perhaps that shows that they have exceeded their rate of return? Is there any intervention or proactive intervention by the commission or commission staff such that we don't ride this out for seven years, for instance?
So the filings get reviewed by the commission staff that's assigned those specific company financial reports. And when things become out of the ordinary, they get noted, and the staff member will reach out to the utility if it's something that's, significantly out of the ordinary. But aside from that, they're kept track of, every utility company, and we just monitor them and keep an eye on them.
Okay, so,
Commissioner Gray, sorry for the interruption, but there's some systemic problems here that need to be discussed I need to talk with Mr. Hartigan about, one of which is, it's incredible that the customers don't get word of these reports. That the DPA does not get a copy is incredible to me, and could obviously lead to a quicker look at these sort of situations. And also, I don't know, but it seems like to me that no one wants to do a 310, and no one's done a 310, and there's probably good reason for it. And what are the other alternatives? I don't know. It's something we need to think about and talk about, but it's really beyond the scope of this particular finding we have to make.
no, I understand, Mr. Chair, and this is not something I want to belabor the point. It's just an interesting question since the duration of time seems to have been so extensive. So my comment, first of all, is that balance to me is important between a ratepayer, Tidewater, also between revenues and costs. I think the chairman makes a very good point. I do want to recognize a statement in response to Ms. Iori. I distinguish a difference between rate of return and earnings from my experience. There's a distinct difference in the metrics a company can earn, but the rate of return has a relationship between its capital investment as well as its operating costs. And all of those bound together will derive a rate of return, which is what we have allowed in this case. And it may be that their earnings have exceeded either their investment, their operations, the way the reports have been presented. So I see them as related, but they're separate metrics in terms of measuring a company's performance. It does look to me, with this situation, that, as the chair says, Tidewater has reacted. It appears as though Tidewater has gone to accumulate as many pro forma adjustments in the cost ledger as they possibly could to bring their rate of return, which is related, down within compliance range. And so I too favor a petition made by the DPA. And one of the comments I would make is that, if the commission ruled that the financials in this matter were not confidential, then why no documents to support the testimony about the pro forma cost reductions? And I heard that from Mr. Watkins, I heard that from Ms. Iori, and I think, Mr. O'Connor, you confirmed that there was no written documentation to reflect and confirm what those costs were, what built those costs. So my position in this matter would be to adopt the recommendation of the DPA.
Is that a motion, Commissioner Craig?
I move that the commission adopt the recommendation of the DPA in this matter.
And I second that.
Is there any further discussion on the motion? Hearing none. Commissioner Correa?
Aye.
Excuse me.
Conaway?
Aye.
Excuse me, Summer Pope on behalf of Commission Counsel. I don't believe that staff's attorney was heard.
I did remember that, then I forgot it. Mr. O'Brien? Mr. O'Brien?
Thank you, Chair and Commissioners. No, I just wanted to clarify a couple of things. When we talk about overpayments by customers, the only time a customer makes an overpayment is if the utility charges a rate above the rate that's been approved. The authorized rate of return, just like it's not a guarantee of earnings, it's also not a cap on earnings. There are times when utilities do temporarily go above their rates of return. It could be based simply on something like abnormal weather. So from a legal sense, it's the rate that is the cap, not the authorized rate of return. As far as the 311 directive, the Section 311 directive to the commission to consider projected earnings, council is correct that that doesn't necessarily apply to a temporary rate under Section 310. So yes, the commission legally can set a temporary rate based on an unadjusted rate of return report if it so chooses. It's just, the question is, why would it do that when setting a permanent rate, the commission does have to, and does by precedent, by statute, by widely accepted rate-making principles, we do set rates prospectively for a rate-effective period in the future. So staff is just wondering why we would set lower temporary rates that when Tidewater could turn around later and not only recoup its lost revenues from those temporary rates that are less than its current rates, but also arguably its lost revenues from the difference between its current rates and its new increased rates, if that's what a pro forma analysis ultimately shows. So that would be a double whammy for customers in the long run in exchange for this temporary lower rate in the short run. So that's all staff is trying to say there. That's all I want to say. Thanks.
To answer your question, I think I already did. I said I just can't sit here and vote for something other than what the DPA has recommended. I mean, there's just been too many years, and it's just perception-wise, and I think, and also to be frank with you, that we're sending a message to the company that we don't really want to be in these situations. And this thing went on much longer than it should have. It was a combination of problems, not only the companies, but we shouldn't have 3, 4, 5 years go by without staff finding these sort of issues.
Mr. Chairman, may I?
Certainly.
Mr. O'Brien, this is Commissioner Gray. I think I started in my comments by recognizing the distinction between what I would describe to be earnings and what I would describe to be rate of return. And so I do think that the commission does establish an allowed rate of return. That has no bearing on the cap in earnings that a utility can bring in. Earnings can soar, but I think that philosophically the logic is that we don't want an infinite, unlimited amount of profitability out of a monopoly that we regulate. So therefore, we put the rate of return, which has a relationship to earnings and to operating expenses as well as to capital investment, depreciation. The rate of return is a calculated value, and we're looking for within range. If it gets too far out of range, my view is that we're too far out of balance, away from the value that we are supposed to bring to the customer. So I'm fairly comfortable still going with the DPA's recommendation. I just wanted to acknowledge that earnings and rate of return, we do not cap the earnings. So there is the opportunity for a company to continue to earn as much as they'd like. But when they put their financials together and calculate their rate of return, they should be within range of what they are allowed by the commission.
Commissioner Correa?
Mr. O'Brien, I concur with Commissioner Gray, but also there is, about these legal arguments and what have you, there are two major points in my mind is that this is happening since 2014 except 1 year. And number two, rate of return, as Commissioner Gray mentioned, is a range. And if we get something in future permanently, we will welcome that. But as of today, the whole situation, both ways, and looking at the customers, I think it was Ms. Iori who said that every dollar is a dollar is a dollar. And so many years of a dollar becomes lots of dollars. So I concur with DPA recommendation.
Any further comments? Commissioner, I think we've had a motion and a second, correct? Commissioner Correa, how do you vote, sir?
Aye.
Commissioner Conaway?
Aye.
Drexler?
Aye.
Commissioner Graham,
Aye.
and I vote aye. The matter passes. And thanks very much to all the council. Mr. Bowman, thank you. Finally, Ms. Iori. Thank you. Is there anyone here from the public that would like to make public comment to the Public Service Commission? Mr. Slater, sir.
Thank you. I've been waiting patiently to say this. Yes, I'm a Tidewater customer. That has no bearing here. But, we are charged with representing all ratepayers. So on behalf of 47,000 Tidewater customers, I just want to thank you.
Okay, we have next Mr. Hardigan.
Thanks, Chairman Winslow. Our next meeting is August 31st.
Okay, thank you all very much for attending.